This is Gerardo Del Real with Resource Stock Digest. Joining me today is the president and CEO of Dore Copper Mining, Mr. Ernest Mast. How are you today, Ernest?
I am fine, Gerardo. And how are you today?
I am well. Thank you for asking. We have gold at $2,040 an ounce. Copper flirted with $2.95 a pound today. I joked earlier with someone that Dore Copper should be called Dore Copper and Gold. I believe, judging by the market action and your share price the last few weeks, people are starting to catch on to the fact that you have exposure to a lot of copper, a lot of gold, and an infrastructure advantage that I think will bode well for you and the company moving forward. Let's talk about the most recent piece of news. You intersected 14.2% copper, 1.16 grams per ton gold, and 28 grams per ton silver over 1.5 meters at Cedar Bay. And you intersected the high-grade vein in Crown Pillar at Copper Cliff. Let's start there. You had some other news in regards to Joe Mann, and it's going to be a busy next couple of quarters for you. But how did you feel about the news from this morning?
We feel great about it. The intercepts really show the potential that we have in the camp, that we're definitely a camp play. The intercept at that central vein of 14.2% copper was the highest grade copper intercept we've ever had at Cedar Bay. And it's located approximately 160 meters from a previous high-grade gold and copper hit. So we're currently doing some infill in that area. As a reminder, the Cedar Bay mine operated from 1958 to 1990, and the shaft is in place to about 1,036 meters, and we're drilling at a depth a little bit below that. So although these holes are deep, the infrastructure is in place to get to it in mine, which is why we're drilling these areas. And that intercept on the Crown Pillar at Copper Cliff, extremely high grade, 7.3% copper and 13.6 grams per ton gold. Between two intercept areas, we have 5.3 grams per ton gold and 3.65% copper. And there's a series of veins that come to surface there, and we only drilled one of them. So it's something we're going to be following up on, and this is extremely near surface material. Technically, we can find a way in which to mine it, as it is close to the surface. So it just shows you two examples that we have of high-grade copper and gold mineralization that we can continue to build upon.
Something that was notable in the release is the fact that the true widths are pretty consistent with the intercepts that make up the highlight numbers, right? And oftentimes you see a release and you see mineable widths in the highlight number in the release, and then you look at the true width and it's 0.2 meters of high grade and it's smeared, and that was not the case here. I think it's important to highlight that given the existing mill and the infrastructure that you highlighted earlier.
That's correct. And we used a directional drilling technique on some of the holes that we drilled that were announced in the press release. And so what we did essentially is we started out at a traditional dip of about 60 degrees, but then using directional drilling technology, we flattened the hole so it was almost horizontal. And that allowed us to go through a series of structures so we could hit the structures pretty well at the same depth. And that's why the true widths are so close to the downhole widths.
Excellent. Program is ongoing. What can we expect from this specific program? And then let's talk Joe Mann in just a second.
So the program is ongoing, and what we can expect is we'll be doing some down dip drilling of the Cedar Bay 1020 A and B structures. These were structures that returned gold grades between 10 and 20 grams per ton when we drilled them in 2018, and we're testing the down dip extension of those. So that's something to look out for. In addition, in this area too, we will probably have another look at some of the adjacent veins on in the Copper Cliff area because of the spectacular nature of the results that we obtained. And moving on to the Joe Mann property, we're going to commence drilling that, I would say, in about in a week and a half now. And we're going to be targeting an area that had two intercepts that were drilled in 2008 after the mine had closed in 2007. And the two intercepts we're following up on were approximately 1 ounce per ton, 3 meters thickness and 1.8 meters thickness. And they were located 150 meters apart. So it's already highlighting that this could be a big area, and it's 170 meters below the lowest mine working. So we'll start off with 2 holes, and we'll do various wedges off those holes and look to establish a maiden resource in this area. And if we're successful, it's actually going to be one of the highest grade gold resources in North America.
You reference in the release the eventual hub and spoke restart of the camp, and I mentioned the mill earlier. For those that are new to the story, can you provide a brief overview of that infrastructure advantage? Because relative to the market cap, even after the recent run-up in share price, you're incredibly cheap given the market we're in.
Correct. So this Chibougamau camp started in the late 1950s and operated until 2007. Topography here in this part of northern Quebec is relatively flat, and all of our deposits have road access. Most of our deposits already have power to them, and we do have a mill in place. The mill is, I'd call it a traditional mill with crushing, rod milling, ball milling, flotation, obviously, and then thickeners and filters. The mill has some redundancy, so we don't need to run it at its full 2,700 ton per day capacity. And the mill, the furthest deposit from the mill is the Joe Mann deposit, and that's about 60 kilometers. So we can implement a hub and spoke because all of the mineralogy in the ores is very similar. So it's all amenable to gravity recovery of gold and flotation. And the furthest deposit 60 kilometers away. And previously, that's how the companies who were operating in the camp, that's how they ran their business. They actually did a hub and spoke where they had 2 or 3 mines always feeding the centralized milling facility, and they got exceptional recoveries on copper and good recoveries on gold. So we just intend to replicate it. So currently what we're doing is by drilling out the properties as we are, we're growing the resources. We've been fortunate in that our intercepts are high grade, so we're going to keep the current high grades we have. One of the main deposits that we will be feeding to the mill is the Corner Bay deposit, which has a resource between indicated and inferred of 3 million tons, over 3% copper. That's extremely high grade for a copper deposit. Mm-hmm. And our drilling that we announced early this year supports that grade is going to maintain itself while the size of the deposit will continue to grow.
A lot to like there. Multiple drill programs. You have the mill. You have a business plan that I know the team is confident it can execute. Where's the market cap stand right now? I mentioned the opportunity there, Ernest.
Yeah, the market cap is approximately $31 million at this point, and that's really just a fraction of the amount we have in pre-existing infrastructure. So you either look at it that you're getting the resources for free or you're getting the infrastructure for free. And we do know the market will acknowledge the existence of high-grade resources and infrastructure as we continue on this journey.
It's important to note that you have some of the quote-unquote smartest money, patient money in the space. Can you share what some of those significant shareholders are? I know it includes Orion, which I believe owns just over 11%, if I'm not mistaken.
Correct. So we've got some private equity firms who gave us seed money when we were a private company, and that includes Resource Capital Fund and Orion. In addition, Ocean Partners is our major shareholder with approximately 26% of the company. They have an offtake agreement for the concentrate production. And we acquired the assets from Ocean Partners in 2017 for essentially 30% of our company. So they're obviously long-term patient shareholders as they'd like to see these mines come into production and actually start producing concentrate. Our copper concentrate that we will produce will be high grade gold, and we have very few impurities, or actually no impurities in the concentrate. So it makes it a very marketable product. In addition, we do have some Quebec funds who have already invested in the company, plus insiders represent about 20% of the ownership as well. So very tight shareholder base at this time. And as you said, very good long-term shareholders form the majority of our ownership.
It's a great position to be in with these prices, to have deep-pocketed, committed shareholders that want to buy what you want to sell them. Ernest, anything else that you'd like to add to that?
No, that's it. Well, I just think it'll be interesting to see what happens with metal prices as we evolve. The copper and the gold stories in many ways are complementary to themselves, but we may have a bit of a unique situation here as the world recovers from this COVID pandemic, is that there's going to be a lot of infrastructure spending. There is a concerted move to the electrification of transport, and all of that is going to require a lot more copper. And some of the initial response of large mines and copper producing companies doesn't bode well for them to maintain their production levels in the future, as they have they've taken measures to minimize the amount of development being done and capital expenditures being done at the current time. And so as a result, we've been seeing some supply shocks as well on the copper. And on the gold side, we all know what's happening there. The amount of fiscal stimulus that has been occurring is really woken the people up that gold in many ways is a true store of value.
You picked a heck of a time to go public with a copper gold company. Ernest, thank you so much for your time.
Yeah, very welcome, Gerardo.
Chat soon. Take care. Be safe out there.
Yeah, thank you. You too.